Hello everybody, welcome back to Candle Mind YouTube channel, and let's give you the updates about the 8th of May 2025. So let's look at the beginning. And so if you, first of all, let me tell you, if you haven't seen the previous video on the 7th of May, please go and watch it to see what is happening every day. And yesterday it was down here market when I closed my position that I had taken nearly here, and after I closed my position, I just the day ended and the new day began. So the most important candle of the day is this one, the first candle. And I told you from the beginning to the close, from the opening to the close of the candle, I always draw a rectangle to see how the market does whether it respects this place or not. So last night, the move down was in a spike, as you see clearly here, and after any spike phase, you should always be waiting for a channel to form. This is the market cycle. And if you just know where the market is going to act and just read it correctly, you're going to take a lot of good positions. So after the spike, it entered in a channel, and after 3 touches, 1, 2, 3, it just broke the channel from above and just 2 legs, and after it breaks, usually you have to expect at least 2 legs and 10 bars. So if you see, this is the first leg here, and this is the second leg, and this candle, which is in the next day, has created a gap between the open of the candle, bottom of the candle, and the moving average. So this is our first 20 gap bar moving average, and I'm going to just create some new videos about the strategies and the price action, so you can see it on this specific course, which is absolutely free. So after this first candle forms, you can just put in a stop, stop sell order below this, and put your stop loss, just measuring this big candle, and put your stop loss right here. This one works perfectly, comes down, and then the second gap between the moving average and the bottom of the candle, which is the second moving average gap ball, which is more reliable setup for me. And if you see, just instantly this bearish candle forms and could just hit your targets. And after that, the market creates a trading range. It's in the beginning of the day, and we know that this channel has been broken. And when the market exits the channel, I never look for new trends. I believe the price action tells me that there is a lot of indecision in the market. That's why you have to be waiting for the market to just form trading ranges a lot. And as you see, after this channel breaks, market then enters in a trading range, lots of overlaps, but each small trading range breaks above and forms another trading range. It breaks above and forms another trading range. And this trading range is also in a wider trading range, which is this channel, which each channel is also a part of trading range. Crazy stuff, right? So easily I know, if we consider the channel as a part of trading range, so the bottom and the top for the bullish case, and the top and bottom of the channel for the bearish case, which is the bearish case here, or the plays as the top and the bottom of the trading range, which here I always measure, you see. And if you see, market just has pumped itself up to this part. So this part here all plays as a trading range, down, up, and then completely down. But let's look what has happened to this part. After this channel line is this trend line is broken, with this bearish candle, series of bearish momentum candles come into play, and you could just sell the market by the close of each these candles and short the market, put the stop loss below the previous high, which is the best place to put your stop loss, and take the target, and market will just hit this beginning of this trading ranges, which is the three smaller ranges here, in a very big trading range from here to here. So market instantly comes down and touches and somehow covers all the previous trading ranges and comes to the open of the day. And when this happens, this sharp move, and market somehow shows indecision. That's why this move has been created by the buyers and sellers. Lots of buyers put, lots of sellers take their profit targets, and some buyers just put buy orders here. That's why this move up, specifically these two moves, double bottom forms here. And also for the bearish case, we have a double top here, which is another setup, good setup for me in the continuation of the pattern. So if I were in the market, I would definitely short here. And something else about this pattern, this trading range, I can tell you that when market reaches to a place, an important resistance or support level, which is a support level case here, it just revolves around it. You see, and if you see this here, it goes and passes, comes above, goes down again, and goes above. So that's why in the middle of this trading range, market revolves around it, and then it starts just break below it, and then you could just short it right here, or put an sell order below this low and put your stop loss above this high, which is the best case for the stop loss and your profit target. You could just measure this leg, this spike, I mean, which is another spike in this case, from the beginning of the move, which the close, the open of the spike, the open is here, and the close, you can measure it for the next leg, which is here. And if you see, if you had just put your profit targets here, market would have touched it, and you could make enough money. So and just I mentioned that this one here is a spike, and after each spike phase we have a channel which you can clearly see, and each channel creates three moves, 1, 2, and 3. Then it breaks above. And what happens after each channel? You know that each channel, just I told you, each channel is a part of trading ranges, ups and downs. So it breaks it above, goes up. Again, the first moving average gap bar, you could just short the market below it, put your stop loss above the beginning of this channel, and just you see market starts to going down again. So when the market is here, it's a sign of trading range, because I'm absolutely in a big confusion. I don't know whether the market is going up or down, and a lot of overlap bars. So market has lost its momentum, and it is in the third phase of market, which is the trading range. So I just when that's the case, I always look for to buy the lows and sell the highs, or BLSH. So that's the case here. And when the market has created this low, it becomes the low of the day. So hardly ever market can break it. If it has just broken the channel line, so just you can short the market and buy the market, short the market and buy and short again. And until now, you can clearly see what I mean after each channel market enters in the trading range. Down, up, down, and up. And look what has happened here, which is quite interesting, I think. A lot of traders might have gone long here because they say, oh, okay, this resistance level has been broken, so very big bullish candle, let's go long. And they can put their stop loss here or here and to just go long. But for the more conservative traders, I can say at least they weren't stopped out because their stop losses were here. But a lot of traders who I can say maybe beginners, they have been stopped out. Then another big move creates here, and people who have longed the market here, when they see this until the market is here, they say, oh wow, what a big bullish candle, let's go long again. But the thing that they don't know is that the market is in the trading range. 85% of its effort to break a support or resistance level fails. That's when the big whales come into the market, and then they start to take the other side of your position. That's why it's so frustrating trading ranges, and most traders don't like to trade it. But for me personally, it's the most reliable setups, because I know where market enters in the trading range. Then I can take the trades specifically when it breaks and the break fails, like we have it here. This is the failed breakout. It breaks from the top of the trading range. It is a failed breakout. Then you could just easily short this big candle, and much more reliable setup would be this one again. Okay, and I'm shorting this, which I told you the second signal is much more reliable. That's why the bears can finally create these 1, 2, 3, 4 bearish candles with a strong volume, and also they can finally break the trend line. And then, as we know, we are still in a trading range, so we can here just short the market, short the highs this time, and put our stop losses above this last higher low. That's when market just again drops down to the resistance level here. But this candles for going short a little just makes me nervous, because I know whenever market comes out and fails from the trading range in a part, and it can't just make it to continue its way, and if it reverses, it usually comes down and breaks the other part, which easily you can see here that's the case. And what else has happened after this market just comes out of this trading range? You should just look for the ways to short the market. So this is clearly a breakout, a successful breakout for me. The whole body of these two candles are out. This one has a lot of momentum, so going long isn't absolutely a wide thing to do. The only thing you can do is shorting, which in this case, this is a spike series of bearish candles. So if you short any of these close, you can just put your stop losses here. Okay, and so putting your stop loss here and shorting market downside, we know that after a spike phase, we 80% of the time we enter into the channels. So, and that's the case here. Again, another channel, two failed breakouts, and the first breakout of either top of the channel or the bottom of the channel fails. And finally, you can see again the cycle repeats itself. It just breaks above, touches the moving average, then market enters again in a trading range. So what should I expect here? I should expect tonight, or I don't know, maybe tomorrow, the market just touches this top of the channel, because this is what market does. Or either it can just create a, another trading range in the middle, which its support is in the middle of this trading range, and just if it breaks it from above the middle of the trading range, it can touch it here, which I expect, but the move is so fast, and it could just happen or not, doesn't matter. So that's it. Thank you again for watching the video to the end, and I think after watching a series of price action videos like this one, which will definitely help you to improve your market analysis. Thank you so much. Please hit the like button and subscribe, and leave any comments below, and you are free to ask anything. I can make videos, or I can just comment below the post and reply your answers. Thank you so much.